Hello traders, in this video I'm going to show you how to take advantage of the market using only one candlestick pattern. This pattern is pretty much simple, but you have to know how to enter the market and also know how to use it properly. So in this video I'm going to show you all the steps that you need to follow and then show you what the steps that you need to do when using this candlestick pattern. It's pretty much simple. You will understand it very easily because I have written everything down so that you can understand it properly. So first of all, let's start with the formation of this candlestick pattern. This candlestick pattern incorporates bearish candlestick. In this scenario here, we can see that we're still bearish on the side here. So when you see price breaking this prior low of this bearish candlestick with this bullish candlestick here and close with a bullish candlestick like this, you have to know what's going to happen in the lower time frame. So this candlestick should be different. In this case, we can see that we are bullish. So the formation says that we need to trade this candlestick low in the lower time frame. All in all, this candlestick will not be available at that moment. So we need to catch this low point here. So this is the formation. Before we move forward, guys, the higher time frames is this ones here. If you find this formation in the higher time frame, that means the lower time frame of the weekly will be the 4 hours, 3 hours, 2 hours, or maybe the 1 hour if you want to reduce the risk for entering the market. This is not a trading strategy, but I'm going to show you how to enter some of the trades when we move forward. So on the daily, the lower time frame will be 1 hour, 45 minutes, and 30 minutes. This is based on someone who is using TradingView to analyze their markets. So in this case, we will be using TradingView to analyze the market and see what the lower time frame will become. So the 4 hours, the lower time frame will be 45 minutes, 30 minutes, and 50 minutes. This is for someone who wants to hold the trades for maybe 3 days or so. And then for weekly time frame, that means you're going to hold the trade for maybe at least a month, 1 month, or something like this. So the next thing that we need to cover, guys, is that we must ask ourselves a question: why this pattern specifically? This pattern, guys, you see here, we have an order block here based on this candlestick here. But then price traded above this high here and then shoot lower to break the demand zones low. So for those who are entering this kind of trades here using a buy limit order, that means their trade will be stopped out by this move here. So we want to avoid those kind of things using this pattern. As you can see, this pattern here, we can see we want to see price trading below this candle slow here. Okay, so let me explain firstly. You can also incorporate things like break of market structure, support and resistance to make your analysis even better. As you can see, we have incorporated our break of market structure here. And then secondly, we want to see price trading below this bearish candle slow here. And you can also see that this bullish candlestick traded below this bearish candlestick here and also rejected price to the upside. This goes to show that there is a momentum in the market that price might be bullish to the upside. Okay, but from this demand zone or bullish order block, we can see that price traded below the zone, so which makes this order block or demand zone invalidated. Okay, so the structures are pretty much simple. We can see on the bullish side, you can see we need to see price trading below this bearish candle slow and then close bullish. This will make a bullish analysis to the upside. And then on the bearish side point of view is the same thing. You need to see price moving higher. This is a bullish candlestick, by the way, moving higher, trading above this previous candle's high and then close bearish. Okay, and we can also see that the market, when it opens here, it shooted higher and then rejected quickly. So that means the next price action is to the downside. So what we need to do and understand is that we need to catch the next candle's high here. This is what we need to catch to take advantage of the market like this. Okay, so let me show you what is going to happen when you move on to the lower time frame. In the higher time frame, you'll see a pattern like this. Okay, and then in the lower time frame, you'll see a pattern like this. And you can also use so many things to enter the market. You can use supply and demand zones, in your indicators, price action, support and resistance. It all depends on which kind of trader you want to become. So it's pretty much simple to understand the structure like this. So in this case, we can see that we have a break of market structure, and then the market broke it with this high here, came down to this zone here. You can also use trend lines because you can see 1, 2, and a 3. You can enter here. And sometimes when you see this kind of pattern here, sometimes price does not give you a perfect entry point for the first time. It can give you here or even here, but on this section here, it might be difficult for you to understand price action if you are using different types of strategies. And sometimes it can be very late, like it can give you a zone around this area. But once it breaks the previous high, like around here when the market was like this, once you see a price doing something like this, breaks this previous high here, just avoid it because we are already in the highest point of the market. So what you can do is that you can use the same scenario on here using the previous bearish setup that I have previously demonstrated, and also check for price action here. You can see this leg here is very strong to the upside. It shows some sort of rejection. We can also see that here the market was very bearish here, but then it rejected quickly to the upside. That's why we see this move from here was very aggressive here, and then the market started to correct here, correct again here. This is where you should take advantage of the market. If not, then just avoid this kind of setups. So let's move on to example 1 so that I can show you in details how the market behaves using this candlestick pattern only. This is the 4 hours time frame. This is the 50 minutes time frame. This is your higher time frame. This one is your lower time frame. We can clearly see from here, price traded above this high here, which will confirm that the market might be bullish. But then price also traded below this low here. So you will be confused if the market is becoming bearish or bullish. So that's when we have to start to analyze this market here. We can see we have this bearish candlestick here. We have the low of the bearish candlestick, and then price traded below this previous bearish candlestick's low and then close bullish. This is a rejection. So we need to take advantage of this. What we need to do, guys, is to enter on this candlestick here. We need to enter here. This is our entry point in the lower time frame. So in the lower time frame, you have to understand that we need to make our analysis. If something is not clear, just avoid it at all cost. So let's move on to the lower time frame. We can see that we were very bearish with some strong candles. Then the market traded lower and then pushed higher. But you can see this price action here is very difficult to understand. But if you know how to draw your supply and demand zones, this will be pretty much simple to understand. So let's look at it clearly here. Price traded above this high and this low here and started to stall around here. So that means we have to look at price action here. We can see we have a bearish candle. We can draw the zone like this here. And then what we need to do, we can enter on a confirmation candle. We need to see a bearish candle first and then a bullish candle secondly. So this will be your entry when this candlestick closes. But as I said before, this is not a trading strategy video. I am just trying to show you what you can do in the market if you see this kind of candlestick pattern. So let's move on to example 2. In this example 2, we can see that we are on the daily. The lower time frame will be the 1 hour. Your analysis in the higher time frame, you can see that we have a break in market structure here. You can see that price also manipulated this high here. We have a supply zone here. And then this candlestick, this bullish candlestick, you can see we have it. It entered the zone and then dropped lower to make a bearish candlestick. But then in the lower time frame, you have to also see that there is a rejection in price action. We have to see that there is some huge bearish candlesticks in the lower time frame, because you can see this is a rejection candle here. So in the lower time frame, you can see that we have tapped this high here like this. This is the last bullish candlestick that was very strong. Okay. And then we can see that the price is starting to be bearish with some strong candlestick around this area. So what we need to do in this case is to follow the trend, the rejection trend, if I may say in that way. But this structure over here is pretty much simple to understand. We can see that we have a market that is moving like this and then started to shoot lower aggressively with this candlestick here. And then it went up, make a high around here. This is the high. Made a low which slightly traded below this previous low, and then the market shoot higher again. If you realize here, these candlesticks are very slow, but this is your signal here. the market was very bearish here. This candlestick was very strong. So that means the market might likely push lower aggressively in this case. So after the market has broken this high here, you need to look for your entries around this area point here. In this case, if I can show you, it's pretty much simple to understand here. Let me show you. Let's make that structure again very clearly. So our zone will be drawn from this bullish candle. We draw the zone like this. So once price trades above this high here, you can enter on this bearish candle close, put your stop loss around here, and then the market will shoot lower. It didn't even waste time. There was a lot of momentum here. You can see a lot of momentum to the downside. So in the lower time frame, guys, what I need you to do is to go and backtest this kind of pattern in the lower time frame. Even on this area here, we can see that we still have the same thing. Even if we move on to the lower time frame, you will see that this move here to the upside will have some kind of signals in the lower time frame if you have an entry strategy that you are suitable with when you are trading. So let's move on to the third example. On this example, we can see that we are on the 4 hours time frame. Let's look at this area here. We can see that we have a bullish candlestick here. This is a sign that the market is bullish, and this is also a bullish engulfing candle. And then we also have this candlestick here. And this candlestick here, guys, you can see that the market was like this. Let me show you. This is the candle that I'm demonstrating right now. The market opened, shoot lower aggressively, and then started to push higher and then close. So you can see that the market here is not even bearish. It started to shoot lower firstly, but then the market says, no, we're going to the upside. And then we again close with a bullish candlestick. So you can see this bullish candlestick here. It opened at the same time like this, shoot lower below this previous candle here, below this previous candle's low, and then shoot higher and then close. So in the lower time frame, we need to take advantage of that. As you can see, this is the low that was broken here in the lower time frame. You can see we have something like this. So right now in the lower time frame, you need to find a demand zone, because in the higher time frame, you can see that the market has already confirmed that price might be bullish to the upside. We have a lot of rejection. So we draw the zone. This is your demand zone. Wait for the market to touch the demand zone and then close with the bullish candlestick. This is your confirmation candle. Can enter here when the market closes, put your stop loss here, and then ride this trend to the upside. You can see it even made something like this and then move higher again. So this is your first entry. If you have missed it, then just forget, move on to the next pair. Don't always force your trades. This is the market, okay? Because everything in trading, guys, this is not always perfect. There will be some other ways that this pattern will fail. So I want to show you where this pattern will fail most of the time. Even when you are doing your backtesting, you'll see that this pattern will fail in some certain areas. So I want to show you where this pattern will fail most of the time. This pattern, sometimes, guys, you can see we have this bearish candlestick. The market traded below it, but you can see this wick here, it shows you a sign that price still needs to push lower again, because the market opened, I'm explaining this candlestick here, guys, opened, shoot higher, but then it was rejected, then shoot lower and then close, okay? But then if you are someone like me who likes to take some advantages in the market just to test out new things, you can see when this candlestick closes, the market was just playing around in this area, drop lower to break this low here to make this kind of pattern here. So you need to be smart and have the knowledge to think what will happen next if you are using this kind of structure. But the only thing that this market made here, it shows that the bullish presence is still available. You can see by the strong moves here, the sign was already there, but the market tried to reject it because there were so many people trying to push the market lower, but the bullish was very strong. And we can see that price already rejected it again here. So if you want to enter on this kind of trade setup, you just need to wait for price to be clear on your side. If it's not clear, just avoid it. You can see the first entry could have been around this area using this candlestick to enter, or around this area here to enter when price closes with the bullish candlestick, because the market was still very bullish. This one candlestick is not a sign of reversal in a way. It just shows you that we need to retrace, but very quickly. So that is why we see this bullish move continued very fast. So if you have enjoyed this video, guys, please subscribe to the channel, follow on Telegram, because I post weekly trade setups. and also like this video to reach more people. So to end the video, guys, I want to show you where you will find this pattern most of the time. You will find this pattern in some technical analysis, support and resistance levels, supply and demand zones. This is where you will find this pattern most of the time. Here, in a breakout and retest, in a reversal pattern, support and resistance level, like this, in this area. But here, this is your higher time frame. These patterns here are all in the higher time frame. You will find it everywhere, especially on this one here that breaks this high. Always focus on this area to target the change of character here. Okay, even on some trend lines, you can also find them like this. And also this pattern here, I would like to make a video about it, but I will just do it in the future. This is a very profitable pattern, guys. I love it with all my heart, especially when it's around this area. If you enter here, just wait for the breakout. I know some of you will discourage each other from using trend lines, but this one is very, very effective. And also, if you want this PDF, you will find it in the description below. There is a link where I post all the PDFs from all my videos. So stay safe, use a stop loss. I'll see you on the next one.